Every company has a balance sheet, right? Revenue numbers, a stock price. But what if the best way to really understand an investment wasn't just through the numbers, but through its story? Today, we're diving into the story of RateGain, a huge player in travel tech that's at a really fascinating turning point in its own narrative. And every great story starts with a problem, a quest. For RateGain's founder, Banu Chopra, the mission was crystal clear right from the beginning. He saw this super fragmented world and had a vision for a single, powerful platform to fix it. This wasn't just about building a business, it was about solving this massive industry-wide puzzle. So, for this explainer, that's exactly what we're going to do. We're going to look at RateGain not just as a stock ticker, but as a story. A story with a hero, a major plot twist, a few villains, and, well, several possible endings. It's a fantastic way to grasp the forces shaping its future. So, let's get into it. All right, let's kick off Act 1, where we meet our protagonist. To really get this journey, we first need to understand who RateGain is and what its grand quest is all about. So, in simple terms, RateGain is kind of like the invisible hand that helps thousands of hotels and airlines make sense of the digital world. It's a software as a service, or SaaS company, and it uses AI to help these travel companies make more money and reach more customers. You can think of it as the digital brain power behind the Book Now button. And now for Act 2. This is the moment where everything changes. Every great story has that one turning point, right? The one that raises the stakes and totally alters the hero's path. For RateGain, that moment was one absolutely massive acquisition. And look, this wasn't just some small purchase. This was a total game changer. By buying Sojourn, a giant in travel marketing tech, RateGain didn't just grow, it completely transformed. I mean, overnight, it doubled in size and massively expanded what it could do. It was a bold statement about its ambition to really own this market. And the immediate impact? Wow, it was staggering. In the third quarter of fiscal year 26, right after the deal closed, their consolidated revenue just exploded, up by nearly 94% year over year. A huge, headline-grabbing number that basically screams success. But you know how stories go. Things are rarely ever that simple. Because if you strip away that acquisition, if you look at the company's own internal organic growth during that exact same period, you get a much, much quieter number, somewhere between 4 and 5%. And this right here, this is the central conflict of our story. An epic surge from a big purchase versus much slower, more modest growth from within. So, the crucial question becomes, what story are the numbers telling us now? After that huge plot twist, what does the financial health of our protagonist actually look like? Okay, so the Vantage 7 analysis engine gives RateGain a pretty solid conviction score of 7 out of 10. But the real story is in the breakdown. See, while it scores really well on its core business and financials, there's a bit more caution around its valuation. And that reflects that central conflict we were just talking about, impressive scale versus that slower internal growth. And here are the key plot points in that financial story. Its margins, which is a key way to measure profitability, are solid at 16.1%, but management is aiming even higher. They've also been really aggressive about paying down the debt from the acquisition, which is a fantastic sign. But the PE ratio, which tells us how expensive the stock is a little steep at 36.7. That suggests the market already has really high expectations. The hidden gem in all this, though, is a very healthy 30% growth in bookings, which is a great sign for future revenue. Of course, no story is complete without some conflict, some real obstacles. So let's meet the antagonists, the challenges and risks that are standing in RateGain's way. And there is one huge one, the biggest and most dangerous villain of all, what the analysis calls the kill switch. This is the existential threat. If RateGain can't successfully merge Sojourn into its operations, if the promised synergies just don't happen, or if clients get frustrated and leave, the whole strategic gamble could backfire in a really spectacular way. And the kill switch isn't the only antagonist lurking around. The company also has to battle a pretty mixed track record on organic growth. It's operating in the brutally competitive travel tech space, and it's facing the constant threat of a global recession that could hit travel demand. On top of all that, getting new customers is expensive, and that can put a cap on how profitable they can be. So that brings us to Act 3. We've met our hero, we've seen the big plot twist, we know who the villains are. So how could this story possibly end? Well, the analysis lays out 3 pretty distinct possibilities for the next few years. And this table does a great job of laying out those 3 paths forward. The most likely one, the base case, has about a 50% probability. That's where they see steady integration and organic growth of around 6 to 8%, which leads to a target price of 725 rupees. The bull case? That's where everything goes right. Organic growth soars past 10% and the stock could hit 900. But then there's the bear case, where the villains win and growth stalls out, and that could drag the stock all the way down to 450. So we've gone through the whole plot, but what does this all mean for you? How does this story connect to your own financial journey? Let's just boil it down to risk versus reward. In the best case scenario, the potential upside from today's price is about 56%. In the worst case, the downside is about 22%. So that gives you a reward to risk ratio of roughly 2.6 to 1. Now that's not a guaranteed home run for sure, but it is a pretty compelling proposition. And to make it even more real, let's just talk about actual money. If you invested 1 lakh rupees today, this table shows that in the most likely base case scenario, it could grow to 1.9 lakh in 5 years. And that's a performance that would actually beat the broader market, as represented by India's Nifty 50 index. So, what's the final verdict from the source material? Well, it's a buy. But, and this is a big but, it's with medium conviction. The conclusion is that the potential in RateGain's story outweighs the risks from its villains, but it all comes down to execution. Management absolutely has to deliver on the plot they've set in motion. Ultimately, the most exciting and, the riskiest part of this story is that the ending hasn't been written yet. RateGain has set the stage for a dramatic transformation. The question this leaves all of us with is, after hearing the story so far, what role will you choose to play in its next chapter?